I want you to understand that what I believe is happening is that many of the large purchasers of our U.S. Treasury debt, foreign governments, have been shedding and not continuing to purchase debt. In fact, not rolling it over and letting it expire and taking that cash and purchasing gold. But I think that they realize what gold represents, in fact, is an asset that has outperformed the bond market for the past 25 years tremendously, averaging almost 8% per year on average for the last 24 years, as the bond market has averaged maybe a third of that or less with the low interest rates of the last 10 plus years. But it does not have the counterparty risk of sanctioning, of confiscation, of default. And so I think what you're seeing is central bank purchasing really pushing up gold.
In recent discussions, AndySchectman, CEO of Miles Franklin, sheds light on central banks' significant role in driving up gold prices through their strategic purchases. Schectman suggests that central banks recognize flaws in the Western price-setting mechanism and advocate for higher valuations of gold and silver. The recent surge in gold prices signals a trend of global central banks accumulating the precious metal, aiming to diversify away from the US dollar. This move comes in response to persistent large fiscal deficits, which threaten to diminish the dollar's real value and exacerbate inflationary pressures. Gold's recent upward trajectory has been notable across various currencies, reaching 50-year highs against three-quarters of major developed and emerging market currencies. Schectman highlights the strategic maneuvers of Brics countries in accumulating commodities, including gold, as part of efforts to reduce reliance on Western-dominated markets and pricing mechanisms. Central banks are drawn to gold, which represents a hard asset outside the financialized system when held outright. However, the primary motivation for diversifying into gold is to reduce exposure to the US dollar. Schectman underscores that countries not on friendly terms with the US see gold as a safeguard against the risk of having their reserve assets seized, citing Russia's experience. Moreover, foreign governments, particularly significant holders of US Treasury debt, are observed to be reducing their holdings of US debt and reallocating funds into gold. For instance, China's holdings of U.S. Treasuries peaked between 2012 and 2013, exceeding $1.3 trillion, but have since been gradually declining. As of December 2023, China's holdings stand at $816.3 billion, indicating a strategic shift in asset allocation. Join us as we explore the insights shared by AndySchectman. Stay updated by subscribing to our channel and activating notifications. Thank you.
People are noticing, obviously, the price of gold take off. And it's been my belief that over the last several months, a large portion of the run in gold, which has in many respects kind of caught the investing public asleep at the switch, if you will, as premiums have been ridiculously low, as we've documented very well over the last 6 months or so, and the availability as good as it's been in years. But I want you to understand that what I believe is happening is that many of the large purchasers of our U.S. Treasury debt, foreign governments, have been shedding and not continuing to purchase debt. In fact, not rolling it over and letting it expire and taking that cash and purchasing gold. And I've talked a lot about that recently, done again, how gold has no counterparty risk. It doesn't have the risk of sanctioning. And in the case of Janet Yellen gallivanting off to Brazil in Russia's backyard, i.e. a charter member of Brics, publicly saying, look, we need to confiscate these assets that we've frozen, the $380 billion in Forex reserves that we've frozen and sanctioned. Now we need to confiscate them. And to take the extraordinary step of crossing that Rubicon and confiscating another nation's assets, when the rest of the world looks at us as being hypocritical. We've talked about the way we've handled ourselves in Iraq and the punitive measures we still have in place 20 years after invading them against 14 of their banks and against holding all of their oil revenue, which we don't give them access to. And so much of the world looks at us as being hypocritical and tyrannical and doing things with force and sanctions rather than cooperation, the way the Brics do. And so I think that these countries say to themselves, not only are they very concerned about the way we are handling our ever increasing debt binge and addiction to spending and wondering, well, at what point does the rubber meet the road and that debt no longer become attractive to the world? And maybe we should start to pare down our exposure to it. That's part of it. But I think that they realize what gold represents, in fact, is an asset that has outperformed the bond market for the past 25 years tremendously, largely, averaging almost 8% per year on average for the last 24 years, as the bond market has averaged maybe a third of that or less with the low interest rates of the last 10 plus years. And so I think what you're seeing is central bank purchasing really pushing up gold. But I want to read to you something, and I think you'll find it very interesting because to me, it really shines a light upon the fact that they understand what's going on. They being the Brics, they understand that the Western price setting mechanism is flawed. It is manipulated. That the price of gold and silver should be much higher, not just the price of gold and silver. Remember, we talked about the fact that a few years ago, China bought the LME, the London Metals Exchange, which deals primarily in base metals. I think they do some precious metals, but mostly copper and steel and zinc and lead and those kinds of things. They're now going to be warehousing those metals in China and listing those contracts on the LME owned by the Chinese. The Chinese are very shrewd, and what they are doing is making a play on all of the world's commodities, both soft, hard, and precious. They're accumulating the soybeans and the corn and the wheat. In fact, as a side note, Brics has just floated the idea of a new grain exchange where global prices are primarily determined by the Chicago Commodity Exchange, the COMEX. These countries who produce as much or more grain than the West does wants to be free from the price setting mechanism. And that's what we're going to talk about here in one quick second.
In 2024, the BRICS bloc will continue expanding, having successfully inducted multiple new nations in January. The bloc is anticipated to extend invitations to additional countries throughout the year. With a growing number of nations expressing interest in joining BRICS and aligning with its objectives, the United States and the European Union are confronting a new emerging threat. Notably, BRICS member China is venturing into Western territory by strategically acquiring gold exploration companies with substantial cash investments. China's Yintai Gold firm recently finalized a significant sale agreement with Canada's gold exploration company, Osino, for 368 million Canadian dollars, equivalent to approximately $272 million. This acquisition marks China's intention to fully acquire the Canadian gold exploration firm through a cash transaction valued at $272.53 million. Despite the geopolitical significance of these developments, AndySchectman acknowledges that they may need more attention in Western media and could require thorough research to uncover. Let's get back to the interview.
Another thing that I've been saying for 2 years is that the Shanghai Cooperation Organization and the Eurasian Economic Union would join the BRICS, and they will. And in fact, he talks about how the Russian system that mirrors SWIFT is already integrated with the Eurasian Economic Union, and the Chinese CIP system is already integrated with the Shanghai Cooperation Organization. You put these entities together, along with the Belt Road Initiative, which are all the countries, including all the OPEC countries that are aligned with the BRICS and their agenda, you're talking the majority of human population, the majority of GDP, two of the three largest nuclear arsenals on the planet, the majority of all the natural resources, including the energy supplies like oil and liquid natural gas, and not to mention the majority of all the key shipping lanes, such as the Red Sea and the Straits of Hormuz. And they have it surrounded. So what you are witnessing, not to mention all of the new corridors that they are building, the North-South corridor and the North corridor, that is the Arctic corridor that in the winter has to be cleared with icebreakers, all sorts of new shipping lanes, all of them that would be free from interference with the U.S. Navy. These are things that are happening and happening in a very rapid escalation. The whole progression has been really methodical, but the acceleration is beginning to, I find, is beginning to be pronounced. And although the Western media does a horrible job of telling us anything that's important that's happening outside the borders, it's what I'm here for. And I spend an inordinate amount of time trying to research this. And with 200 meetings leading up to the big one in October in 2024, all BRICS related, all in Russia, we will see an acceleration that will, I believe, really shock some people. And I think sides are going to be chosen. It wouldn't surprise me one bit to see France and Macron formally apply to the BRICS. No, he hasn't done it yet, but certainly the fact that he traded with China for liquid natural gas with the United Arab Emirates and paid with it in yuan, the fact that he asked to be a full member at the BRICS meeting in August, although it was turned down, is a big deal. And the fact that he, struck a 50-point trade agreement with China, ranging from 5G to military engagement, not to mention the things he's said speaking out against our ambitions in the Ukraine, that here again, even people who we consider allies, including Mexico, were by the South African ambassador to Russia, just came out yesterday, the day before, and said that it is his belief that Mexico has initiated an application to join the BRICS. So even our allies to the South. So although we don't have formal admission of this, again, we keep hearing it, and where there's smoke, there's fire. So I think we will see a continuing growing number of countries that are growing together. And, this will all be done in a manner to misdirect. It's not going to be in our face. You're going to have to dig to find it. But when it happens, when these changes happen, it will be wholly relevant and significant.
In a significant development, the new BRICS members, Egypt and the United Arab Emirates, have signed a landmark urban development deal worth $35 billion. According to reports from Bloomberg, Egypt has agreed to allocate $35 billion to the UAE, enabling the latter to spearhead the development of the town of Ras El Hekma. The historic agreement highlights growing cooperation among BRICS nations for regional economic growth and development. That's all from us. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.